Raoul, we've managed to hold ourselves back for 12 minutes from talking about what's happening in Bitcoin in the crypto space. Obviously, Bitcoin futures linked ETF seems as though it will not be blocked by SEC. What are your thoughts on this, and what's its significance for this space?
Look, it's very good on some level because it gives people access to the space that couldn't get access before or were felt uncomfortable with custodying their own coins. And so that opens it up for the RAAs and all sorts of others. So the amount of investment inflow, I mean, I've been flagging this for ages. We knew it was coming. We knew it was coming about now. It's actually come about 3 weeks earlier than I thought it would, but it's here and the flows haven't started yet. But let's talk a little bit about the construction of this thing. This is a futures contract. Why does that matter? Well, the SEC like it because futures are regulated and it's on the CME and it's cleared so you don't have the custody problem. One of the movements behind crypto was this self-custody, the ability to take control and get rid of middlemen. What the SEC has actually done is create a product that will deviate from the price of Bitcoin because of the futures contract. So it will trade at a premium in bull markets and a discount in bear markets, just like the GBTC product does. Opens massive opportunities for hedge funds to arbitrage it, buy the Bitcoin and sell the futures contract, and it settles at the correct price. So they make a fortune out of this. Not only that, but the construct of these ETFs also bring in, you or I could just go to the exchange and buy Bitcoin, right? We're paying the exchange a little bit of money. That's it. Done. We self-custodied it. Nobody else involved. This vehicle means that the arbitrageurs take their slice, the ETF provider takes their slice, the lawyer who set up the fund takes their slice, the administrator, the auditor, everybody is taking a slice out of your pie. And we've seen this with stuff like the USO contract, the oil one. The futures then trade at massive contangos. And all that happens is you don't get the performance. And everyone says, well, Bitcoin's up 300%, and how come it only made 100%? Yeah, because you've been screwed. If the SEC really cared about looking after investors, they wouldn't allow these futures contract versions. I understand for commodities it's useful, particularly with agricultural commodities, because you can't store them. So a futures contract works, and it's suboptimal is what it is. But there's no excuse for something physical like this. It's just no excuse. And I think they think they're helping the little guy get access and it's safer. What they've actually done is enriched Wall Street's monumental infrastructure all the way through to make money from it again. And it's just not fair.
Yeah. So what's changed? I mean,
nothing. Nothing. I mean, this is the thing is in the end, Wall Street lines its own pockets. It lobbies government to make sure that its pockets are always lined because it is the middleman. I mean, I've talked about this on the show before, is the reason why the securities laws are in place is also because the middlemen are now the gatekeepers. That basically is what the law is. Has to be a security, you have to do it in this way. And what you're doing is adding middlemen. You're not allowed to invest directly in a startup because that would be considered a security. You're breaking the law. But lo and behold, if you buy it through your RAA who's got it approved, really? You're just paying everybody fees. And it's being wrapped up as expertise and we're trying to keep you safe. It's nonsense.
And by the way, all of those middlemen always convince themselves that they're adding some value. It's not a malicious conspiracy. They really believe that they are, in fact, adding value.
And they are, I mean, to be truthful, you're adding value because you're giving people access to this market that wouldn't have access before. But it's wildly suboptimal. That's the issue I've got with it. I still think it's bullish because in the end, the arbitrageurs buy the underlying tokens. So there is real demand. So it's not like fake demand. This is just a derivative. It's not how it works. It works from arbitrage. So in the end, the tokens get bought, taken off chain. So it works.
But again, those contracts have to be rolled. So you can have the potential for negative roll yield that's going to dramatically eat into the performance and would be dramatically outstripped by the underlying in certain market conditions.
And it will definitely happen, and people will be upset. And where's my money gone? Why has my brother made so much money in Bitcoin and I bought the ETF and I've made less? That's a valid question.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right. iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
Futures are very sophisticated things for people to understand. How is that helping retail investors? Because those same retail investors can't buy a futures contract themselves. Oh no, because they need to be accredited investors or have proven the ability to trade futures and options. But fine, if we stick it in an ETF, which is just holding futures contracts, you suffer everything apart from the inability to meet margin.
Raoul, I mean, there's so much going on. There's a lot happening in the macro space.
The macro space, I see it on Twitter. Everyone's very excited about inflation, blah, blah, blah. Bond yields went up. They came back down again a bit. I still can't get excited. The dollar broke higher, but it's not moving anything dramatically. Bond yields, outside of the screaming and shouting about this is the end of the world of inflation, bond yields don't suggest much yet. I think they could get to 175 in the 10-year, but I still think they're range bound and lower. I still think growth comes lower. We're seeing this huge dichotomy with the Fed forecast and the Atlanta Fed. The Atlanta Fed, I think, currently is like 1.3% GDP growth for this quarter. And the Fed had 7%, as David Rosenberg pointed out, if you impute it. So I still think there's a slowdown. I think you are raising prices on people that cannot raise wages fast enough or will get those wage rises. So you've got negative real, that's going to lower consumption. So without question, you can't raise the price of oil, natural gas, foodstuffs, rent, cars, and houses, and it not to affect consumption. So I think that forward growth is still low, and I've talked about this for a long time, but these macro trends take ages to play out.
WTI crude right now trading at 82.24, and the 10-year yield at 1.574 as we have this conversation, Raoul.
Yeah, and these have been the rate of change is what matters the most. If you raise people's fuel prices very quickly, it tends to be recessionary. Now, I'm not saying that this is a recession coming, but I think next year is a shock to growth. I just don't see a way. People look at the wage growth, but forget that is being offset by the massive number of boomers leaving the labor force. So the labor force participation rate doesn't go up. So what's happening is there's a bunch of people who are going to be living on retirement income and a bunch of people who might get some wage rises if they're lucky. But that basically offsets each other. So I don't see a net demand increase to the economy. And in fact, demand then gets eaten away because of the increase in prices because of the supply shortages. And that doesn't seem to get resolved yet.
That's just what I was going to ask you about. That's something we've been talking about here on Real Vision: tightness in the labor market, some looking like inflationary trends, particularly in commodities, the energy sector, WTI, oil, Brent, LNG, you name it. And of course, these the tightness in the labor market. The fascinating thing I see here, Raoul, is that we've been talking about these issues on Real Vision. But if you're watching some of the, let's say, major financial news networks, you hear about these stories in very sort of academic terms. But the man and woman on the street, small business people, have been talking about this now for months. They're talking about supply chains being constrained. They can't get parts. They can't get goods. They can't get, steaks at restaurants. Something is happening with supply chains here. What's your take on this, and what's your implication for what it's going to do to the economy more broadly?
I don't really understand still why the supply chains are such a mess. And it's everywhere. It's a global mess, and there's a backlog that doesn't seem to clear, obviously due to the pandemic and underinvestment in certain places as well. My view on that, as I said, is it's killing margins. It's killing margins for businesses. It's killing margins for people of their earnings. And so I think it's an economic negative. What we're seeing, I think, is a massive tightening of financial conditions. If the cost of all your goods goes up, your wages don't go up enough, so hence the negative real earnings that's going on right now. Interest rates gone up, the dollar's gone up. That is all bad. And the Fed is starting to taper. So all of this is a tightening of financial conditions. It's really interesting to me. You see the pushback from the very anti-Fed crowd is, see, we told you. And I ask everybody, okay, what do you want to do about it? Do you want to raise rates? And what happens to the economy? You completely destroy the economy again. It's a really shitty situation for the Fed to be in and everybody to be in. I think the Fed are right that this is transitory, not meaning that the prices will fall back down again. For some stuff like used cars and stuff, they will. But the price rises get locked in. So these are real meaningful things that happen. But the continued rate of change slows down eventually. How raising interest rates, the Fed needs to raise rates. How that allows for shipping containers to clear at the port of Long Beach. It does not. Does it stop the price of coffee beans going up because of the failed Brazilian harvest? No, it does not. What does it do? It destroys household savings again. Because you start upsetting the balance sheet because there's so much leverage. So it's not easy to get around. Don't know what the Fed can do. It is going to be a very painful period. And it's painful because this is kind of stagflationary, which is slowing growth with prices still high. And that's not good for an economy.